Hi children, this program is conducted by Ministry of Education in collaboration with Guru Kendra Education Program. This is sponsored by AAT Sri Lanka. Okay children, today we are going to learn grade 10 business and accounting studies. Today the lesson will be petty cash book. It's a part of your lesson number 7 in your textbook. Now children, you learned about the primary books in previous lessons. There are a number of primary books in a business, but for your oral exam, you have to learn about only 6 primary books. Those are cash book, bank account, petty cash book, sales journal, general journal, and purchase journal. So we did about cash book in the previous lesson. So today we are going to learn about petty cash book. We'll see what are the learning outcomes. Indicates petty expenses. Now children, in a business, there are expenses or payments of higher value as well as small value expenses. Normally, higher value expenses are recorded in cash book. But children, there are some small value expenses also in the business, like cleaning expenses and traveling or stationery expenses. Those are very small expenses which relate to the other expenses, but not like other expenses. These small expenses business has to do always, like frequently. So that kind of small value expenses are known as petty expenses. So next one is the name source documents for petty cash book. Children, now you know what source documents. Source documents are the documents where we can get all the details about the transaction. So when we are doing this lesson, we are going to learn about 2 source documents, that is receipts and petty cash vouchers. And children, in this lesson, you are going to learn a new word called petty cash interest. Interest, it's a new word for you. It's a new word for you. We are going to learn that also in detail. And children, now this petty cash book is, children, not like cash book. In cash book, I think you can remember, there are 2 sides only, debit side and credit side. But in the petty cash book, children, debit side and credit side is there, but in credit side, we are using some analysis columns to show expenses separately. And you will learn that also. There's another specific format for that, for petty cash books. We are learning that later. And we are learning about how to record transactions in the ledger accounts also. When there's a transaction occurred, we have to record that. So we are learning how to record that in the petty cash book and how to record that expenses in the ledger account also. Then we'll go to the next one. The next slide. Petty cash. Petty cash, that is money that is kept in the office of a business for making small payments in cash when necessary. Now children, in a business, normally, as I told you, there are higher value expenses and there are small value expenses also. For the small value expenses, in business, normally they keep separate amount, a specific amount for month to do that type of expenses. So as I told you, this payment of cleaning expenses 150. It's a small value expense. And this postal charges 60 rupees. Value is small, and normally a business has to do this kind of expenses frequently. And traveling also same as that, 350, small value expense. So for that type of expenses, we call petty expenses, and they are using some specific amount, separate specific amount in a business to spend for these expenses, to do these expenses. Then we see petty cash book, that is primary book in which the payments of cash with small values that occur frequently are recorded. Normally children, this kind of expenses we record in petty cash book. Petty cash book, as I told you, it's different from the cash book. We are using some analysis columns, and we'll do that later. We are going to do it later. So source documents. So these are the source documents. When petty cashier receive this money from the main cashier. There's a document called receipts, and petty cash voucher is there for all the payments. So they take details about the transaction from these source documents, receipts and petty cash vouchers. Then I told you earlier a new word called petty cash interest. That is the specific amount of cash which is given to the petty cashier by the main cashier to make petty cash payments with the control. Now children, in the business, normally cash book is handled by the main cashier, right? But in a business, we can see there's another cashier called petty cashier. He or she is handling petty expenses. Therefore, children, now main cashier has to give a specific amount of cash in the beginning of the month to the petty cashiers to do expenses during the month. So that is we call petty cash interest. And I think as an example, in a small, normally for a month or period, they know normally how much is the value of petty cash for a period. They know that main cashier gives a specific amount, maybe about 2,000 or 3,000 for the petty cashier to do that expenses. That is the petty cash interest. And there's another word, reimbursement of petty cash interest. That means when petty cashier spend that money during the month, and at the end of the month, he want to request money again from the main cashier to do again expenses in the next month. Therefore, petty cashier has to request cash from the main cashier before petty cash interest is over. Before that over, petty cashier has to request money from the main cashier, and petty cashier should given the amount equal to the amount of payments made at that time. That means main cashier has to give the interest to the petty cashier to spend in the next month. Then children, we'll take an example and see what is this interest and reimbursement and everything. Now here they say petty cash interest of the business of Amadi was rupees 2,000. That is, the main cashier is giving 2,000 rupees to the petty cashiers to spend during the month for petty expenses. The following payments were made out of this interest received. Now these are the expenses they have done during the period. Right? Now traveling expenses 350. Then cleaning 600. Then entertainment 500 and stationery 350. So they have done these expenses during the month, and the total is 1,800. Then children, here interest is 2,000 and the petty cashier has paid 1,800 during the month. Therefore, petty cashier is having this. Petty cashier has this rupees 200 with him as balance. Then he has to reimburse 1,800 from the main cashier at the end of the period. Then, beginning of the next month again, petty cashier has altogether 2,000 rupees. That is to spend expenses in the next month. You go to the next one. Preparation of petty cash book. Now in this petty cash book, children, we use, I told you earlier also, we are using a few different analysis columns. And we record similar type of payments in same column. As an example, stamp charges, envelope payments, postal charges are recorded under postal charges column. Now here all coming under postal charges. So we use a separate column named postal charges. Now think about traveling, three-wheel charges, bus fare, and that kind of all traveling expenses we record under another column as named as traveling expenses. Like that, we use separate columns in petty cash book to show expenses. And children, if any payment cannot be recorded under any column, a separate column known as sundry expenses would be drawn. Now, if there's any other expense if we cannot include other columns, we have to use another separate column named sundry expenses. And children, if any other payment need to be separately posted to the relevant ledger accounts, that type of expenses we can't record under analysis columns. At that time, we have to open another separate column called ledger account column. Now, these are the examples for that. Cash paid to creditors. When you are paying cash for creditors, we should know how much paid for each and every creditor. So at that time, we are keeping a separate account for each and every creditor in the ledger. Therefore, we have to show separately how much we paid for all the creditors. Therefore, we are using another separate column for each and every creditor. And purchase of assets of small value. If you are purchasing some furniture, small value assets, at that time we can't record that under other analysis columns. So that also we have to record under the ledger account column. We'll go to the next slide. Dual role of petty cash book. Now this is also, children, same as the cash book. Petty cash book does two functions. It works as a prime entry book and a ledger account. Right? We call it as a prime entry book because we record all the transactions at first in the petty cash book. Now all the petty cash expenses we record first in the prime entry book. After that, we take totals later to the ledger. So we record in petty cash book. So we call it as a prime entry book. And children, the other thing is we consider the petty cash book as a ledger account because we use both debit and credit sides in the petty cash book. And entries are recorded according to the principle of double entry for assets. Therefore, we are considering this petty cash book as a ledger account and a prime entry book. Okay, right. Format of a petty cash book. Now, children, you know about cash book. That is a bit different from this. There we use debit and credit sides. Now, here also we are using both debit and credit sides, but we are using some analysis columns and some other things more than the cash book. Now, children, here when petty cashier receive cash from the main cashier, we record that in the debit side. Right? The debit side, here we have to write the interest of the balance when petty cashier receives. And date, description, and the petty cash vouch number and the amount. And here we are using analysis columns. These are for several postal, traveling, or stationery, sundry. We have to name the column according to the expenses given. So then the ledger account column. I told you if there's any other expense which we can't record under these analysis columns, we have to open this ledger account column. And final one is ledger folio. And after recording all these expenses here, we have to get the totals of each and every column and we have to record that to the ledger account later. Okay, we'll take an example and see. Now this is the double entry for petty cash transactions. Now when the petty cash interest is received and the reimbursement is made, that means when the petty cashier receives money from the main cashier, at that time we record as petty cash book debit and the main cash book credit. And when there's a cash payment occurred, that time relevant expense account debit and petty cash book credit. And children, the values recorded in the ledger account column should be separated to the relevant ledger accounts. Now, ledger account column, I told you the final one. At that time, we have to take separately those transactions, payments, and open accounts for that in the ledger. Okay, we will now example and see how to record transactions in the petty cash book. Now, following are the information regarding petty cash payments of the business of Mithun during the month of March 2020. And they have given the petty cash interest was ₹2,000, which was received on 1st of March 2020. And this is the petty cash interest, that means petty cashier. was given 2000 rupees by the main cashier, and that was received on 1st of March 2020. And they have given some other expenses also which happened during the month, date, voucher numbers, and other expenses. Now here they have given stamps, traveling, postal, charming, various expenses are there. So according to these expenses, we have to name the columns also in the petty cash book. We go to the petty cash book and see. Now here, you know this debit side, then other side is credit side, and debit side we write all the receipts, and credit side we are recording all the transactions or the payments. So here, analysis columns, we have to name columns as according to the given expenses, the postal, traveling, stationery, sundry. Now this is according to this question. So we'll see how to record transactions. First one, interest that is received on 1st of March. So we'll see how we can record that. That is happened on 1st March 2020. That is the date, and receipts of cash we have to record that in the debit side. So we have to write it in this column 2000 rupees, that is in debit side. And under the description column we have to record the name of the other relevant account, that is cash book. So we record here cash book. Now this is the debit entry of that transaction, and we record the credit entry in the cash book. Now this is the account, and we have to name this account as cash book. Cash book, and we have to record the transaction in the credit side. Date was 1st March 2020, and the description will be the name of the other relevant account. So that is petty cash book. Petty cash book. And the amount is 2000 rupees. This is a credit entry. Now that first transaction is okay now. Then we'll go to the expenses and see how we can record this in the petty cash book. Now again in the same day, that means 1st of March 2020, they have spent 100 rupees for stamps, and they have given the voucher number is number 1. So we'll record this in the petty cash book. Now the date is 1st March 2020. They have spent money for stamps. And the voucher number is voucher number 1, and the amount is rupees 100. So we have to record under payments 100 rupees, and we have to record this in the other analysis column also. That is, we have to open a new column as postal charges, and we have to record that 100 in this column also. That is the first transaction. Then we go to the second transaction. Here they say 4th of March 2020. They have spent 300 rupees for traveling, and the voucher number is 2. We will see how we can record this transaction. The date is 4th March 2020. They have spent that amount for traveling. So we have right here traveling. And voucher number is number 2. And we have spent 300 rupees. So under the payments column, we have to record 300 like this, and we can't find the 300 in this postal column, so we have to open the column as traveling, and we have to record that under that column, 300 rupees under traveling column. And the second transaction is also okay. We go to this next one, third transaction, that is voucher number 3, and happened on 7th of March 2020. And they have paid rupees 50 for postal as postal expenses. So we will record that also now. The date is 7th March 2020 and description postal and the voucher number is voucher number 3. They have spent rupees 50. So we will write under the payment column rupees 50, and we can write in the same column under the postal column is 50 rupees also. Third transaction is also over now. So we will go to the next one and see. That is 8th of March 2020. That day they have paid rupees 500 to Chamit. Now here Chamit is a creditor of the business. So we can't write this 500 under analysis columns. As I told you previously, we have to open another column as ledger account column and record this 500. So we'll see how we can record that. That happened on 8th of March. So we write the date here as 8th March 2020 and description will be Chamit. So business has paid money to Chamit and the voucher number is number 4. Yes, they have paid rupees 500. So under the payment column we have to write 500 rupees. And we can't write this 500 under this analysis columns. So we have to go to the ledger account column. So here we have to write 500 rupees. Then next transaction is pens and pencils 40 rupees. Occurred in 12th March 2020 and the voucher number is number 5. Now we'll record that transaction also. Happened on 12th March 2020 and they have spent that money for pens and pencils. So we can write here pens and pencils. They have spent for pens and pencils 40 rupees and the voucher number is 5. So we can record voucher number is number 5 and they have spent rupees 40. So pens and pencils expenses we can write on postal or traveling. So we have to open a new column named stationery expenses. And we have to record this 40 under that column. So stationery expenses column is here. So we can write this 40 rupees here. Then that transaction is also over now. We go to the next transaction. That next one is happened on 20th March 2020 and the voucher number is number 6 and they have spent 200 rupees for bus fare as bus fare. So we will record that also. Okay, on 20th March 2020 and they have spent for bus transactions. This is bus fare. The amount is 200 rupees. The amount is 200 rupees and the voucher number is number 6. So bus fare we can take under the traveling column. Under the traveling column we have to write is 200 rupees. That transaction is also over now. So we will look at the next one now. Next transaction is cleaning expenses rupees 400 occurred on 25th March 2020 and the voucher number is 7. Okay, we'll see how we can enter this transaction in the petty cash book. Now, we have taken columns as postal, traveling and stationery. But children, this cleaning expenses, they have done only once for the month. So that kind of expenses which is occurring very rarely, we record in the sundry expense column. So we'll record the transaction. Now here they have done it on 20th March and the amount is 400 rupees. 25th of March, cleaning expenses and voucher number is 7 and the amount is rupees 400. So under the payment column we have to record this 400 as well as we have to record the same in the sundry expenses column also, 400 rupees. Then children will go to the next one. Okay, children will go to the last transaction that has occurred on 26th March 2020 and the voucher number is 8 and they have spent rupees 60 for stationery. So we'll record that in the petty cash book. Now here for stationery we have already opened a column. So no need to open a new one. We can record the same thing in the stationery column. So the date was 26th and 26th March 2020 and they have spent money for stationery and the voucher number is number 8 and they have spent rupees 60 for stationery. So we have to write that under the payments column and under the stationery column also and 60 rupees. Now we recorded all the transactions in the petty cash book. Now we have to add these transactions and see how much they have done for each and every expense, how much they have done separately. Take the total and see. For postal they have spent 150 rupees and for traveling they have 500 rupees and stationery 100 rupees and sundry 400. They have spent 500 rupees also for creditors. So children, we have to record these expenses separately in the ledger accounts. Now we have to open a new account for postal and for traveling and stationery and sundry. We have to open separate accounts and for Chamit also we have to open another account and post these transactions to the ledger accounts. Then we'll do it later. Until that we complete this part. Now this part is credit side. Now initially they got petty cashier got 2000 rupees as interest and spent this amount. So we'll see how much he has spent during the month. The total of these expenses is 1650. So during the month they have done expenses of 1650 and we'll see how much of balance petty cashier has at the end of the month. So to get the balance, now you know how to balance an account. We did in previous lessons. We had to get this higher value first like this and we had to record that here as 2000. From this we had to deduct 1650. Then the balance is 350. That means petty cashier is having this 350 at the end of the month. So we write it as date is 31st March 2020 and we take this balance for the next month. So we write it here balance got balance carried down 350 for children. At the end of the month, petty cashier had 350 rupees of balance and petty cashier request 1,650 from the main cashier. Then next month, beginning of the next month, that means April 1st, rupees 350 is there with the petty cashier. So we have to show it as the balance brought forward. So we have to write the date here as 1st April 2020 and balance brought forward is 350. Now children, when petty cashier requests this 1,650 from the main cashier, he gives that money in the 1st of April. So we have to record that also as 1,650 received on 1st April 2020, and we have to record here the name of the other relevant account, that is cash book. Cash book. Children, this is how we record transactions to the petty cash book. Next, we have to see how we can record these expenses in the ledger accounts. Okay, first one is postal and traveling, stationery and sundry expense, and last one is ledger account columns. Then we'll see first how we can record postal expenses. Now, postal expenses means it's an expense for the business. So we have to write in the postal expense account in the debit side. It's a debit entry because it's a expense for the business. And in the petty cash book, it's there in the credit side. So credit entry is there already in the petty cash book. So we have to record that 100. Total of the postal expense is 150. We have to record that 150 to the postal account, postal expense account. So we have to name this account as postal expense account. And we should write that in the debit side. So the date will be, normally we write the last date of the month, that is 31st March 2020, and under the description we have to write petty cash book because we did this from petty cash. Petty cash book. The total is 150. That is how we record expenses. You know this now. Then next one is traveling expenses. During the month they have done 500 rupees for traveling. So we have to open another account called traveling. We can write here as traveling expense account. That the amount was 500 rupees. So we have to debit that amount to the traveling expense account. Then write the date as the last date of the month, that is 31st March 2020, and under the description we have to write petty cash book. And the amount was, for traveling we have spent 500 rupees. When it was 500. That is also over. We go to the next one. Next one is stationery. For stationery, they have spent 100 rupees. So we have to open another account as stationery. Stationery expenses account. And we have to write the last name of date of the month, that is 31st of March March 2020. And we have to record here analysis description. And we have to write here petty cash. And the stationery expenses was, total stationery expenses was rupees 100. So we have to record that 100 rupees. 100 rupees. Next one was sundry expenses, that was rupees 400. So we have to open another account as sundry expenses. Sundry expenses. Sundry expenses account, and we have to write the date as the last date of the month. Then under the description we have to write petty cash book. And the sundry expenses total was rupees 400. Rupees 400. We recorded all the transactions under the analysis columns to the ledger accounts. But children, now there is one text, that is ledger account. That is, they have paid 500 rupees for Chamik. Now Chamik is a creditor, so we have to open a separate account for Chamik. Then we have to go to the ledger and open another account, Chamik. Chamik account, and we have to write the date, 31st, 3rd, 2020, and this description is petty cash book. The amount was rupees 500. This is how we record transactions to the ledger accounts. Okay, children. Now we'll see the question paper and learn some more about this petty cash book. Okay, children. Now we'll see a question paper and we'll learn how to post transactions to the petty cash book. Now this is 2019 question paper and question number 5. They say monthly petty cash interest of Ruan traders received for November is rupees 1000. That means for the month petty cash interest is rupees 1000, and they say petty cash payments for the month of November as follows. They have given all the expenses what we have done during the month, and finally they are asking recording about transactions in a petty cash book and balancing it as 30th November 2019. And they are given 4 marks for this question. Okay, children, now we see how we can record transactions. Now, in the exam, you have to draw the format in the answer paper, and for this format, you'll be getting half a mark. And you have to write the name of the business and the name of this statement. So here, Ruan petty cash book of Ruan traders. You write and see petty cash book. Petty cash book of Ruan traders. For the month of November, November 2020. 2019. Then children, we'll see how we can record. Now, 1st of November, petty cash has received petty cash interest of 1,000 rupees. So we have to record here 1,000 rupees and received on 1st of November 2019. And description will be cash book. We recorded now debit entry. Then next one is, they say 2nd of November they have spent rupees 150 for postal as postal charges, and the voucher number is number 1. So we'll record that as voucher number is number 1, and the date is 2nd of November 2019, and they have spent that for postal. We can write that here. Postal, and there's a column here as postal, that is the amount is rupees 150. And under the postal column also we have to record that as 150. Then we will say traveling expenses 80 rupees. They have done that on 10th November, and the voucher number is number 2. We will record that transaction occurred on 10th November 2019 as traveling expenses, and the voucher number is 2, and they have spent 80 rupees. We have to write 80 rupees under the payment column, and we have to open another column as traveling to write this expense 80 rupees. We'll see the next one, that is occurred on 15th of November 2019, and they have spent rupees 200 for refreshment. We will record that 15, 11, 19, and for refreshment voucher number is 3, and they have spent rupees 200. So we have to write that 200 in payments column, and we have to open another column as refreshment to record this. So that is rupees 200. Then last transaction is 3-wheeler charges rupees 200, and the transaction occurred on 29th November. So we have to record the time, that is on 29/11/2019. That was for the 3-wheeler charges. So we don't want to open another column for that because we have already opened column for traveling expenses. So we can write the same expense in traveling expense column. So that is rupees 200. Rupees 200 spent for traveling, 3-wheeler charges, 3-wheeler charges rupees 4, and record that under traveling expenses rupees 200. So we recorded all the transactions in the petty cash book, and we add and see the amounts of these analysis columns. Then we get postal 150 rupees and traveling 280, and refreshment they have spent rupees 200. So we have to record all these expenses in the ledger page. Ledger folio. We have to record this in the ledger accounts later. So we have to complete this side also, children. So we have to add this payments column. So that is coming as 630, and they say they are, initially they have got rupees 1,000 as the interest. So we'll take that down and see how much of balance they have now at the end of the month. So you know how we can balance the account. We have to do it like this, and the balance is 270. That is balance carried down on 30th November 2019, and we have to record that as the balance brought forward on 1st 12/19, that is 270. And but they don't say here that they have received the petty cash interest for the next month. So but we have to record that in the petty cash book. That is because normally with petty cashier request money from the main cashier. So we have to show that as 11/12/19. The amount they are asking is 630. And we have to write here cash book. So this is how you record transactions in the petty cash book. Okay, children, I think you understood today's lesson. Today we did about petty cash book. So petty cash book is a prime entry book, and when we are recording transactions, we use it as a prime entry book and as a ledger account also, because we record transactions according to the double entry system as debit and credit, and we learn how to post transactions to the petty cash book, and how to get all the analysis columns in the petty cash book, and how to record the totals of analysis columns to the ledger accounts. I think you can understand this lesson today. We'll meet again in another lesson. Thank you.